Morning all. How are we all doing? Morning, Joy. Morning, Monkey. Morning, Monkey. Gold. Already? Really? Too early for gold. Morning, Joy. Morning, Andrew. Morning, Joaquim. How are we all doing? I've just quickly got my stream running on another window. I just wanted to check the latency and stuff because people have been saying they've got problems with buffering and things. So I'm just checking at my end. I've upped my bitrate basically just to see if that helps in any way. But seems okay. Pretty much about 3 seconds behind, so looks okay. Morning, John. Morning, Shroud. Morning, Winners Circle. Morning, Serge. Morning, V. Morning, Katan. Morning, Virginia. Morning, Sean. Got to stop doing these mornings because it takes up half the stream saying good morning to everybody. Right. Let's see where we are this morning. So news-wise, we had the New Zealand dollar unemployment rate overnight, 3.4%. That's come down, which is good. So unemployment for New Zealand going in the right direction, which helps with the interest rates. Where are we? So yeah, unemployment sitting at 3.4% at the moment, 5.25 on the interest rates, inflation coming down. So everything going in the right direction for New Zealand, which is all good. So overnight, we had a little bit of information coming out from Governor Orr, nothing particularly dramatic. So all that we got really was the same old waffle. Central banks are... The banks are all safe. Everything's going in the right direction. Blah, blah, blah. So nothing particularly exciting from him. Retail sales for Aussie came out at 0.4, which is bullish again. So more positive for the Aussie. So Aussie and New Zealand, good news overnight. We have a quick whiz through them. The Aussie pairs basically not gone anywhere, really. New Zealand pairs, off the back of that news, had a little bit of a run. But again, nothing dramatic. So little bit of movement, not a lot. So impact of the news overnight was very, very minimal. This afternoon, we've got non-farm employment change at 1:15, which is before market open. So that's not really going to affect the open at all. We've got the PMIs at 3 o'clock, which will affect the open potentially. So we might find that we have a bit of a whippy open at 2:30. So just be careful this afternoon if you're trading the opening range breakout strategy, because you might find that you get a little bit of a whipsaw. They're going to probably wait for the PMIs before they make any big moves. And then obviously FOMC this evening. So again, today, what we quite often find on an FOMC day is either it's very, very, very sideways. So look for range highs and range lows, yesterday's highs, yesterday's lows, bounces on those. Or we get them repositioning themselves ahead of FOMC, which means we get big old ADR moves going in. So you never know until the markets really get going as to what it's going to be, but it's usually very, very sideways or very aggressive. Most of the time it's sideways because they've done their moves and they're in the right places. They want to be ahead of the news. So that's basically the overnight news, and there's nothing else overnight. We had some earnings coming out from AMD. AMD was a big miss, 9% down, which is a big drop for AMD. AMD is part of NASDAQ. So blah, 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 blah. Oh, there. Where's AMD? There. So 18th. You can see their shares are down 6.27%. Not good. So NASDAQ and tech basically might have a little bit of a struggle. I would imagine NVIDIA's probably down. Yeah, NVIDIA's down 3.68% as well. So NVIDIA and AMD, obviously the big chip manufacturers. So what happens to one tends to happen to the other. So stocks coming down on the tech sector. So watch NASDAQ this morning. We might get a bit of a drop when Frankfurt opens, but probably a bigger drop this afternoon. So DAX at the moment, just a quick look at the DAX before it opens. We've got 3 minutes. We came off that low yesterday. So remember yesterday, I took that short on the ORB. Yeah, sorry, I took the short yesterday morning, didn't I? And held on to that down to there. I said yesterday afternoon, I'm getting out here. So I got out of my DAX trade down there, basically because of that. And we bounced beautifully off of it. So we're coming up into the propulsion gap now here. So we've still got the gap in play at the moment. So the DAX has still got this gap looming over it down here. Gaps, it's very, very, very rare we leave a gap behind. We've got a very tiny little micro gap there as well, which is 225 ADR. But it looked yesterday as if it was coming down, back down to try and get that gap done. And I said on stream yesterday, we've had this before. Yeah, so we've had a big drop, big drop, big drop, big drop. What happens every time we have the big drop? We get the bounce. Yeah, and that's what we're seeing now. So until we break this low here, this has got every opportunity just to stay range bound again. And as it's FOMC day, there's probably a high probability that we're not going to go very far today. But if we do break down below that low, there's nowhere to go really until we come back down to this gap fill. So that's our next support, which is the monthly low, 175 ADR. We've got that 3-week low there, which is ADR. So downside targets today would be ADR. Highly unlikely you're going to get 175. You never know, you might do. That monthly low, and then it's the gap. So those are the areas to watch to the downside. Upside is obviously yesterday's high, which is 125 ADR. So we'll see where we go. We got 1 minute left on that. ADR's flat. There's nothing on ADR to look at all. Weekly ranges, there's quite a few hits on the weeklies, which we'll have a look at. All of those Aussies, virtually all of the Aussies that had that big move did an A-shaped recovery. So we were talking yesterday in the live room about A-shaped recoveries and V-shaped recoveries. We got an A-shaped recovery on Aussie Swiss. That one's still coming down. Aussie Yen, A-shaped recovery. Aussie New Zealand, A-shaped recovery, and further Aussie US halfway. And remember I said yesterday as well, if they don't do the A-shaped recovery, they do a 50%. Potentially for a bounce upwards. So all of those Aussies, a lot of those Aussies, the A-shaped recovery's gone in. So closed out a load of those yesterday. 50% there. That one's just closed out this morning. That's it on the Aussies. So just quickly recap yesterday. ADR reversals did 0.63%. I think that's the market just opened. 0.63%, 0.2 down today, just a little bit of drawdown control, 5% in drawdown on that one. Nothing particularly worrying there. New Zealand dollar Swiss is in 1%, that's it, so that's fine. Hourlies, hourly H1 M5 mean reversion strategy did 5.47% yesterday. We're up 9.2% on the month. Fantastic at the moment. Banked a little bit this morning, sitting in 2.6. H4 M5 banked 2.6% yesterday, sitting in 1.26 drawdown. So that one's doing very well as well. We've had some good H4 mean reversions this month. Well, towards the end of last month, which we haven't had the previous months. And the H1 mean reversion, 2.54% yesterday, banked 0.6 this morning, sitting in 12%. So all going very well at the minute. As usual. Not always as usual, but most of the time. Right, so DAX is open. There's your pre-market 15, which is basically that candle. God, it went the last 5-minute candle before the open, they dumped. So pre-market 5, 10, 15. Might not have got that on, to be honest. Look at that little gap there. That was a bit violent, that open, wasn't it? Didn't watch it, but the fact that we've gapped, I would say... it may have struggled. You can see the lower the candle there, and the actual opening range that the EA managed to draw was there. So there was a bit of high volume coming in just as the open there. But you are short if you're playing the pre-market. See how that goes. Right. Just catch up on the chat. Morning, everybody I haven't said good morning to. Lots of people come in that I haven't said good morning to. I can't remember where I got to. So, morning, everybody. Morning, Dreska. Morning, Giarmond. Everybody. US dollar yen is at supports. Look at that. Can't see any support. Not as far as I'm concerned. The last resistance would be the next support, which is there. Or there, or there, or there. Somewhere down there. Propulsion gaps to the downside. So still like these yens short. So we've got a fair amount of strength on the yen yesterday. As you can see, big drops across the board on the yen pairs. Trying to undo this crazy rally from Friday. And it's not doing a bad job at the moment. So pretty good moves on the yens. Made a few bob on those yesterday. Euro US dollar. So Euro US dollars just coming up towards previous day's high. That's a stop. Pre-market, you probably stopped out on a break even on that. So Euro US dollar, yeah, we're just coming back up to a couple of previous resistance levels. Nothing particularly exciting. So that's previous day's high, day before's high. Got staggered highs basically coming up at the moment. So we're kind of in a little bit of a flaggy sort of channel situation, but bang in the middle of nowhere at the moment, Euro US dollar. Long at the moment, but we'll find out on FOMC this evening as to what happens with that one. It's all about the news. I'm not sure if you already in a trade, but New Zealand dollar CAD is extremely extended on the H4. I am in a sell. So yeah, we'll have a look at the RSIs in a minute. There's not many RSIs at the moment. A lot of those ones that were extended yesterday are already playing out. So let's see what this 5-minute opening range does on the DAX. We've got 40 seconds left. I banked 2.49% yesterday on my Feudal Crest account. Too bad. Down 0.4 this morning though. Euro US dollar. I'm just taking a quick short on that. Right, so there's your 5-minute opening range break, or opening range rather. So not too bad size-wise this morning. Looks like it's starting to want to go short. So DAX definitely looks like a short today after yesterday. So we put in a new high, not all-time high, but a new recent high. Big, strong pullback down into support, little bounce, back up into propulsion. Like to see it break that low. If we get that low broken, we're coming back down to ADR. So there's your 5-minute opening range break. Short, just short. See how we go there. Euro US dollar. I've just taken a quick short on the Euro US dollar. Up at this high. I've got a stop. Got one position already on this. Stop somewhere around about there. It's above that high, somewhere up here. Target that propulsion gap. M5. About to get a reversal alert on that potentially there. So that would be the entry. I say I'm just taking a short. I'm just about to take a short when I get the reversal alert. Right, opening range breakout is south on the DAX. So we're out the lows. See where that goes. Right. So weeklies. Let's have a look at those first. Which indicator is that drawing out the opening range on the DAX? That's the opening range breakout EA. And there's a link. Oh, that's the Dow. Morning, Brian. Morning, Minpo. How are we doing? Right, so just going to cover the weeklies first of all. So there's no ADRs to look at today. The only ADRs we potentially had possibilities of getting today was going to be New Zealand, but we didn't get them because the New Zealand unemployment wasn't strong enough to move the market. So at the moment, that one's just basically sitting. They're all sort of sitting around waiting. Nothing's moving much. I get the feeling basically today, if you look at anything today on lower timeframes, watch previous day's high and yesterday's high, and obviously previous day's low and yesterday's low. Those levels there, you can see the dotted lines on the chart here. Those would be the ones I'd be watching today. It's likely that we're just going to get fairly range-bound activity all the way through to FOMC. We might get some big movement, but if we don't, you want to be looking, and that's one of the reasons of just taking a short on the euro US dollar. We're just coming up at resistance basically from a couple of days ago. We've broken above yesterday's high in Asia. So I'd be looking for a reaction there for shorts. So just watch everything and look for range bound activity basically today. Quite possible we're just going to hold everywhere. So I wouldn't expect to see any ADRs today. The weeklies we'll have a look at, but again, the weeklies that we got hit, a lot of these, as you can see, were Aussie based or New Zealand based, because that's where all the movement has come this week. So Aussie dollar CAD, this is Monday. There's your hit to the upside on the weekly. Nothing but downside propulsion gaps. But this was also an ADR yesterday as well. So there's double reasons to be getting into this one short. 5-minute reverse alert was this morning up there. So that's the entry. I'm on that one already. In 0.6% profit at the moment, Aussie CAD. Got 2 positions on that one. The Aussie CAD basically got that one on there that I took yesterday, looking for that propulsion gap fill. Then I took a second one yesterday, bring the average up, targeting bottom of that propulsion gap. Ooh. Aussie dollar yen, that one's already played out. So that was your weekly hit. Monday, we hit the weekly range on the Tuesday. That's undone completely. So that one's already played out. Aussie New Zealand, that one's already played out as well. So I got out of my longs, banked that one yesterday on the ADR reversals. Euro odd, that's the opposite. So obviously from the highs down to the lows, back up, propulsion gap filled. That's return to origin, V-shaped recovery. Pound odd, these have all played out really, I think, haven't they? Pretty much. So pound odd, that was your weekly, pushing back up. Pound New Zealand. Right, so there's still potentially opportunity on this one. So that's your weekly range hit there. I've got a long on already. Didn't manage to get a second position on that one. Yeah, didn't quite get it. Just missed it. Should have had a second position on that. Wasn't awake to watch it, unfortunately. But so yeah, that one's the opportunity was this morning on that one, and the New Zealand dollar CAD. So that one's just starting to play out there from Monday. So that was your low of Monday. That was your hit reversal coming down again. Didn't quite manage to get a second position on that one either. 5, yeah, no, it's not even half an ADR. So yeah, so that one's just starting to come down. That was your entry this morning on that one there. Back down into these propulsion gaps. So there's your weeklies. DAX has jumped straight back down into support again. What's that line I drawn on there? Old support level, isn't it? Okay. So yeah, DAX opening range break to the downside underway. So watch this 157.08 level. That is your upcoming monthly and weekly support. Yeah. So that's where potentially we can get down to. We might find a bounce again. So same as before. This level is acting as a very, very, very strong support. So we've knocked on the door 5 times now, not been able to get through. We took a run up that time. We still bounced off of it. So if we do get through that level, this thing's going to flush quite fast. So good speculative short. So the opening range breakout is there. Rather than trailing a stop in case we get some whipsaw on this, I'd probably just leave a stop in there. And if we get that low broken, you're in with a potential shot of a 175 ADR drop. If the NASDAQ opens bearish on the AMD figures, that's going to drive the DAX down with it as well this afternoon. So this could be a big day today. So nice speculative short. I got out of mine yesterday. I'm toying with the idea of getting back into it, actually. The Feudal Crest account. Euro US dollar, what are you doing? Pushing back up into resistance again. Okay. Getting short on the DAX. 0.5% risk. I've taken the my stop above the opening range high completely there. Downside target. I'm just going to go for ADR. So I'm just taking just a speculative short on the DAX. I'm just going to target ADR, which will be a quick flush out these lows. And then obviously getting again on a bounce, going down towards that gap. That plays out. Euro US dollar looks like it's going to come and retest yesterday's previous day's high. Right, RSIs. So there's not a massive amount to look at on the RSIs today. So CAD Swiss, nice big drop to the downside. Hourly RSI extended only just below the 30 level, not back down below that 25 yet. So we had this massive squeeze with the Swiss franc, and it's basically undone 50% of that move, and then we've had the bounce at the 50%. So pushing down at the moment back into this propulsion gap, which is pretty much filled anyway, left that whacking great target to the upside on that weakness that we had on the US dollar and the Canadian dollar yesterday. So oil obviously tanked yesterday, which drove the Canadian dollar down. So we're going to pull back up into this area and potentially back up into this area at some point. Likely that is going to be a movement formed from FOMC. So this afternoon, or rather today, playing around somewhere in this area, I would expect, or potentially pushing back up into that gap. So there is potential this afternoon, or rather this evening, in FOMC for that rate not to come out at 5.25. There was a lot of pressure from the government yesterday in the US to not increase those interest rates further above the 5 level. So they want that to be the terminal rate. And that was what they were initially talking about being terminal rate. The Fed have decided they want to go higher. But there's a lot of backlash towards this. So there may be enough pressure for them to stop that interest rate rise happening. If that does happen, US dollar's coming down. If US dollar comes down, CAD's coming down with it. So there's potential for this to move down. So it may be that we try and make a move up this morning. That's why I say sometimes on FOMC days, you get big ADR moves. That's 125 ADR to fill that gap, 200 ADR to get that done. There's quite often large moves ahead of FOMC, which then all get undone during FOMC a lot of the time. So there is the potential for that to happen today. So we just need to be aware of it. But at the moment, that looks like it's going to continue on its merry way down at the moment. So we're bearish on it. We've had lovely bounces off the 24 moving average. So we've just been pulling back into 24 on the way down. If we break that low, look out below, basically. So, but double bottom potential there. So where we are extended at the moment, we're not massively extended. I want to get in below the 25. So I'd need to push down to ADR. Then I'd be interested in potentially taking a long on that one at the moment. But it is extended, so you could get in now. Drop down M5. Reversal alert is going to be there. So just wait until you get some form of bullish price action, get a structure break, and then you can obviously play it along. But at the moment, it's still coming down. Euro New Zealand is extended at the moment on the 4 hour. So that's just coming out of extension at the minute. So we're pulling back into this 24.72 zone. So this is the area we were looking at for a potential bounce on the Euro New Zealand. We've got the interest rate rise coming on Thursday for the Euro, which is going up to 3.75. Again, there's talk of that becoming 4%. So if that does become 4%, that is going to be massively bullish on the Euro. We're going to get a big run on the Euro, which means that DAX will come flying down as well. That we need to be aware of. So with all these Euro pairs, when you're looking at them, we're at a perfect spot for a bounce there. We've got rejection coming in, big tails to the downside. So that's looking like a nice looking long opportunity. Got one buy on it already at the moment. That's on an hourly RSI extension from yesterday down there. So that's the entry there, was the 5-minute reversal in there. Looking for it to come back up into propulsion. So that looks really good. Euro New Zealand for a long. It's 4-hour RSI extension as well. So nicely extended, ready for that big push up. Watching what this Euro is doing this morning. US. So that's Euro New Zealand. The only other hourly we've got is on the New Zealand dollar CAD. So I'll cover that in a sec. Pound New Zealand, very much the same thing. It's the bounce off the 24. Nice extension down to 20. Nice rejection as well. So we've got a lovely big hammer gone in down here. So nice big rejection there on the short. So as we've been pushing down towards the 24, we've had some rejection, more rejection, inside bar. Then we gapped down, bit more rejection, massive rejection. Now we're going bullish. So this is a 3-bar reversal pattern. So this is a textbook reversal. You've got a bear candle, followed by an indecision candle, followed by a bull candle. So it's down, stop, reverse. So 3-bar reversal. So that's looking good for longs. Nicely extended on the 4-hour. New Zealand dollar CAD, massively extended to the upside. Again, nice rejection to the upside. Got shooting star there. Propulsion gaps completed. So looks good for shorts on New Zealand dollar CAD. Again, Canadian dollar, no idea what's going to happen with this one. If we get bullish moves on the US dollar this evening during FOMC, the Canadian dollar is going to go with it. If oil decides to rally, Canadian dollar is going to go with it. So there's potentially a lot of movement coming on the Canadian dollar today and through Friday as well. So news, if you look at the news, we've got US dollar news is going to affect the CAD. We've got unemployment claims tomorrow. We've got Ivy PMI and Macklem speaking tomorrow. Tomorrow, yeah. And then we've got the unemployment rates for the Canadian dollar along with the unemployment rate for the US on Friday. So there's nothing but news for 3 days on the US and Canadian front. So big moves ahead. We got big propulsion gap to the downside. We've got the 2-month monthly high to aim for a propulsion gap target to the upside, which is 225 ADR away. Obviously, bear in mind FOMC, absolutely no reason why we can't do 225 ADR in either direction. Yeah, so big moves coming. Sustained drops and pumps. So very extended to the upside, but always have to be a little wary when you've got extended conditions just ahead of news, because that could get extended even further with the news. If it's bullish news, if it's bearish news for the US, i.e. they don't increase the interest rates and oil continues to collapse, this thing could just carry on going. So this thing will get embedded and extended above the 80 level, and we'll find ourselves sitting somewhere up here or here. But that's all part of the position trading. So if you take an entry there and it doesn't work out, you plan for your second entry at the previous monthly high, and then you go for a previous month, the month before's high up there. So scale in, you know, you might have 3, maybe 4 positions by the time we get up there. That RSI will be up there. This thing would have gone all the way up there without having a profit take, and it will come slamming down, as we saw with the Australian dollar pairs. Same thing. Yeah, get massive. The more extended you get, the more stretched that elastic band is, the faster the snapback becomes. So New Zealand dollar CAD, good looking short entry there. You've got 4-hour RSI extension, and you've got hourly RSI extension as well, which is just sort of playing out now. The 5-minute reverse alert happened this morning. So there's your structure break this morning. So that is good. New Zealand dollar yen, big extension to the downside. On that, big extension to the upside. It's a yen pair I'm talking about. From Friday, reverse alerts just gone in on the hourly there. Loads of targets to the downside. You know, depending on where your average is, you can see the average on the H1M5 here is sitting at 84. Depending where your average is, you target whichever propulsion gap is the one that can get you out. So you can get out there, you can get out here. You can get out down there. No idea how far it's going to come back, or even if it is going to complete that, but just target where you can get out. Basically, there's lots of targets to the downside on that. And New Zealand dollar US, so that's a 4-hour RSI extension, which is obviously playing out. And New Zealand US, massive extension to the upside. Almost tapped the 75 level, not quite. So yeah, good looking potential short there. But again, it's a US dollar pair, so anything can happen during FOMC. We've got this propulsion gap to the upside on the 4-hour, which is 150 ADR. So weakness in the US dollar this evening in FOMC will take it up to there. Strength will take it back down to fill that propulsion gap to the downside. Looking at the hourly, you got previous week's high in that propulsion gap there. You got a couple of little ones up there, but that's the main one. And then downside, we've got 150 ADR to the downside. So those are your moves. Plenty of potential on those, but not a lot of opportunities, because obviously everything that we had yesterday extended in the previous days all started to play out. Hence banking loads over the last 2 days. So there you go. There's your RSIs. DAX has just pulled straight back up into the pre-market opening range, back to where we started. So complete rejection of the downside. So it looks like we're pushing up into propulsion, unfortunately, because I just took a knee short on it. And I'm about to get stopped out on it. That's how to lose $1,500 in 2 minutes. There you go. Not good, is it? Never mind. I said, didn't I? I don't listen to my own advice. I don't trade gold because gold always makes me lose money. I said I wasn't going to trade indices. What am I doing? Just chucking 1% of my balance away because I decided to trade indices this morning. Never mind. Right, let's catch up on chat. What's your profit target on Aussie dollar CAD? Propulsion. So 50%. My target on Aussie CAD is just above 90, so 91.61. So basically it's this monthly level here, look. Yeah, that's wrong target. Sorry. Realised I've got that in the wrong place. Oh, that was a second. Hang on, which target is that one? I've got 2 targets on it. So target 1 is here. Target 2 is here. So I've got 2 positions on this, remember. So I've got 1 position here, and I've got a second position here. So this one is targeting there. This one is targeting there. And obviously, as soon as I hit target on that one, I'll move this to break even. So that'll probably just get stopped out. Anyway, so yeah, those are the targets on that. But basically looking to that for that propulsion gap to get filled and potentially, obviously, all the way back down here. But this is very, very dependent on what happens with oil and what happens with the FOMC. So difficult to tell what is going to happen with it. On Inguna, you don't take notice of the RSI on the DAX. No, don't take any notice of the RSI on the DAX. Scalping RSI, you can use RSI if you want to. If you look at the RSI on the DAX, RSI, where are we, oscillators? Doesn't matter which one you use really, but you know, you can use the RSI for scalping, and a lot of people do. Depends on the levels that you want to take, but it works, you know, very well when we are range bound. Obviously, the RSI. I mean, you literally can't fail to make money with the RSI when you're range bound. It's just, you know, it's impossible because that is what the RSI is measuring. It's measuring the relative strength of the moves. And after a big strong move in a range, you get a bounce back down to the low of the range, up to the high, down to the low, up to the high, down to the low. So in a range, in any mean reversion state, the RSI is the best indicator in the world, which is why I use it. And 80% of the time, the market spends in mean reversion. 20% of the time, it spends trending, which is why we're mean reversion traders, because we got 80% of the opportunities rather than 20. But the problem with the RSI in scalping is you sit there an awful long time waiting for an opportunity. And when you're using a stop loss, you could be sitting there for an awful long time trying to time an entry into the market. So I just use support resistance areas for reversals, and you'll find that they always tie in with the RSI. So you could use the RSI if you want to, but you know, if you get the support resistance propulsion indicator, that draws all your support resistance lines on for you as well. Use those. So I don't really see the need for the RSI, but you can use it. I just don't use it myself. See, today you wouldn't have taken any trades, but then the opening range breakout strategy is a different strategy to RSI. This is a opening range breakout strategy, is a breakout strategy, not a mean reversion strategy. So it wouldn't use the RSI. Up to you. It's not about the indicator or how when you enter a trade. It's about how you manage the trade after you're in it. So how you get in is kind of irrelevant. What the market does after you're in is what's important, because that's whether you make money or lose money, isn't it? So, but you can choose any way to get in you like. Leanne, what are your thoughts on Aussie dollar yen? I went in on a short on M15, waiting for my exit, possibly the next support resistance level. You went in on a short on the M15 reversal yesterday, is that? So yeah, targets, you've just filled that propulsion gap there. When you're looking at propulsion gaps, the more propulsion gaps there are to the downside, the more likelihood there is going to be pressure to come back and sort these inefficiencies in the market out. However, when you get propulsion gaps forming to the upside as well, there is obviously a reason to drive the market higher. So if you see propulsion gaps forming above you and you've just completed a propulsion gap, we know they bounce quite often out of propulsion gaps as well. So like there, we bounced out of it, but then we continued. That one we didn't, but quite often we will. So it's up to you where you get out when you've got enough money. So if you got in there and your stop was there, I'd be out. The risk reward on that is huge. It's 5, 6, 7 R, isn't it? Doing it the wrong way. Always draw it the wrong way. So if you're using stop losses on it, that's a 4R. I'd be out. 4R. Don't get many 4R trades that work out. Or if you've made half an ADR, so 55 pips, that's 156. But hourlies is what I concentrate on propulsion wise. You've got that one there, that one there, that one there to the downside. So depends when you want to hold it, how long you want to hold it for. I can't really answer that question, can I? As you're probably finding, I'm struggling to answer that question because I don't know what you want out of the trade. I'm looking for half an ADR of profit so I can get it in the bank. That's done way more than that. A-shaped recovery. You can see my short I took on this one on the H1M5 was there. In, out, done. Half an ADR in profit. Just want to know, how do I get John Wick's wallpaper? What? There's a Discord group that makes these. These are all these are made by AI. Everything here is made by AI. So I asked AI, or other people have asked AI as well, to just draw John Wick trading, for example, and they decided to put his dog in there and stuff. This is all done by AI art. So there's loads of Discord channels that you can do it. I can't remember the name of the Discord channel. Mid-Journey. There you go. Mid-Journey. If you want to go and create some AI art, go to Google Mid-Journey. You'll find it. You can draw as many John Wicks as you like. Oh my God, Euro US dollar, what are you doing? Okay, Euro US dollar is just tagged above previous day's high. So it looks like we're going for that high there. Taking a stop in place on that one. DAX is at the highs as well. Stopping out on the DAX. Just about to stop out on the DAX. We're not going to flip long on it. My stop is just above the propulsion gap there, basically. So stop trading the DAX. Funded. Trying to trade it on the. I'm trying to combine. This is what goes wrong in funded accounts. Always is what hurts me in funded accounts. When I'm doing a hybrid position trading, support resistance based strategy for Forex, and I introduce scalping on indices. Scalping on indices, absolutely brilliant. But mixing the two, terrible. All my risks on my Forex pairs are on, there you go, I just lost another 1%, on the hourly charts, right? So it's got to, the trades are going to take 3 or 4 hours before they get anywhere near my stop losses. On my scalping, obviously, literally a 5 or 10 minute candle can stop me out with 0.5% to 1%. It's a totally different strategy. If you mix the two together, you will always fail because your risk is always going to be massively over leveraged as soon as you take those index scalps. So if I take 3 index scalps, I'm risking somewhere between 1.5% to 3% of my account. If I take 6 trades on Forex, I'm not even risking 3% of my account on 6 different trades, which will take half a day to a day to play out. So this is why I've said I'm not going to trade indices on this account. It's just that I see an opportunity like that. Look at it. This is why you don't use stop losses. That's my stop loss. It's just so frustrating trying to do it. Prop drives me up the wall. It's great. It pays me well, but it drives me up the wall. It's not me. I'm not a scalper. I hate scalping with a passion. First time trading the ORB on the DAX today. Oh, not a good day, Henry. Not been good ORBs today. I would like to get the market reversal at CA. My question is the market reversal indicator built in to the EA. No, the EA is its own thing. You don't need it. But if you want to do analysis with the market reverse alerts indicator, yeah, you can't use the EA for that. The EA needs to be put on a chart and left to run. You can't switch time frames, switch instruments or anything. You put the EA on. So if you're going to use it for analysis purposes, no. Unless you're going to run 28 FX pairs on one time frame and never switch time frame, then yes. But the EA is a trading tool. It's not designed for analysis. You're not meant to look at it. You're meant to stick it on a VPS like this. I don't even look at it. The EA, basically, you stick the EA on a VPS, open up whatever instruments you want to trade and let it trade. I don't look at it at all. It's just sitting here trading. This is what I'm looking at, the dashboard. What's my exposure? What's my profit? So don't use it for analysis. That's what the indicator's for manual. New Zealand dollar Swiss. So New Zealand dollar Swiss was a 4-hour RSI extension, already in and out on that one. Yesterday, that was an H1. That was an ADR, and it was an H1 M5 mean reversion. So that was an in and out, same day job. That was lovely, that trade. There. So at the moment, it's just sideways. Potentially, there's a nice M pattern reversal forming there. We just made a new lower high. So if we put in a lower, sorry, yeah, it made a new lower high. If we put in a lower low, we'll be down at ADR. But that will be signs of this starting to roll over and continue basically on that move. So the 24 bounce back down. That looks pretty good for shorts, but it was yesterday. So you're getting a little bit late on that one. Shroud, can you please suggest which VPS would I buy in order to manage 4 or 5 terminals at a time? So if you go onto my website and go to my recommendations, there is a VPS provider on here that I use, which is these guys. And the reason I use them, because in plain English, they tell you if you want to run 4 or 5 terminals, you need that one, because that will run 7 MT4s comfortably, $35 a month. However, the difference between that and that, yeah, is like $13, $14. In the grand scheme of things, buy that one because it's third more powerful than that one, and you'll never have a problem on that one. That one, if you're running 28 pairs on 4 MT4s, if you were to do that, you're going to struggle. Yeah, whenever you're doing anything with VPSs, right, whatever the recommendation is, you don't know what their test conditions are. So they could quite successfully run 7 MT4s with one chart and no indicators or EAs on it. Absolutely fine. 7 MT4s with 28 pairs open running an EA that does 20,000 calculations every 5-minute candle, not a hope in hell. So just get the next one up. Whatever they suggest is what I do. Or just get a dedicated VPS. I spend over $200 a month on VPSs, and I don't care. Yeah, it doesn't make any difference to me, $200 a month, because I make that back in a trade, more than that in a trade, don't I? So it doesn't make any difference. If you're running small accounts, though, the best thing to do is just buy that, set it up, see how it runs. If it doesn't, press the upgrade button. Within 30 minutes, you'll be up on that one. But I'd just go for the biggest one you can get. Dedicated servers are this one. I've got one of these running 6 or 7 MT4s, something like that. 7 MT4s. Doesn't even bat an eyelid. It's not using anywhere near the processing power. It's $100 a month. Think about what you pay to other things. $100 a month is it's nothing, is it? It's $3 a day. Go for that one. I would dedicated. But if you want to get a VPS, go for the biggest VPS. But look at the difference, yeah? You pay $50 a month, you get 10 MT4s with 3 vCPUs. You go over to a dedicated server for twice the price. You can run 25 MT4s, but that will be able to handle anything, literally anything you throw at it. You couldn't overload it if you tried. Obviously you could, but it would be very hard. So that's what I would do. I haven't covered oil this morning. I was just looking at oil, my oil trade. Oil's coming down again. Oh my God, I'm having a shocking day. 1.5% down already this morning. Not good. That's what happens when you use stop losses. You have to take losses. It's horrible. Oil. So we had this big drop yesterday on oil. The Saudis, I think it was the Saudis, can't remember who it was. Somebody announced that there was something to do with production and it all collapsed. This is that's where I've stopped out basically. This was my last call basically on this bull move. So what I was looking for was a bounce. Haven't got it. So I'm wrong. I'm out. I'm lost. So I've got one oil still on, which stop on it is just about ADI. So it's below this propulsion gap basically. That is it. I'm out of oil and I'm done with it if that happens. Basically, you can't read this thing. It's completely random. It pays no attention to news whatsoever. Market structure doesn't hold up on it. The only thing I'm interested in is gaps, but the gap took 3 weeks to even start to move towards it. So I'm just fed up with it basically. Yeah, can't time entries on this thing at all. So far as I'm aware, when we get down to there, that is a long opportunity. But then again, it could come and double bottom this. The market doesn't seem to have a clue about this thing. All the top players in the market are calling $95 to $107 a barrel. Not doing that, is it? So they're all wrong. Even the institutions have got this 100% wrong. So I've decided to just jack it in, basically. So this is basically the last propulsion gap on the 4 hour. On the hourly, you've got a couple of smaller ones back down there, but I've had enough of it. You have to identify it. Same with gold. Not my thing, oil. I can't trade it. I'd lose on it. So I'm out. I'm done with it. I'm just going to move my stop on it, actually. I'm not even going to take that much loss on it. I'm going to take a loss underneath this propulsion. Why haven't I got that propulsion gap on oil then? I've got a propulsion gap where we are at the moment. Price action is very different on my other terminal. So I've got a propulsion gap here, which I've just put a stop under. So I'm getting out of oil. It's not my friend. Gold is not my friend, and oil is not my friend. So I'm not playing with you anymore. Decision made. Morning, Michael. No stop loss. Been trying to test out drawdown control, but the trades keep going well. No stop loss. Been trying to test out drawdown control, but the trades keep going well. Not quite sure what that means, Leanne. Sorry. So euro US dollar what? Say what? What? Euro US dollar. So yeah, it's just taken out yesterday's high. Previous day's high, sorry. We've got another resistance coming up there. I am short. Freeman, morning. Pound Swiss seems to be good. Got targets up and down from where we are at the moment. So it could go either way. All depends what happens with the euro tomorrow. The Swiss franc will move with the euro. So if the euro rallies, the Swiss franc will rally. If the euro drops, the Swiss franc will drop. So right now you're kind of bang in the middle of two targets to the upside and downside, extended to the downside on the hourly though. So I've been looking more long than short at the minute on that one. It's not going anywhere. I don't think you get a lot of movement today on anything. It's FOMC day. So morning, Baggy. Your RSI dashboard. What have you set your applied price to? Median. So I always trade the median, which is basically, it doesn't make a lot of difference. It does make a difference, obviously, when you get the signals, but in the grand scheme of things, it doesn't matter whether you use the RSI median or the RSI close. You trade your own charts, you trade your own signals. When I get in on the median, I have a 50-50 shot of it going up or down. When you get in on the close, you have a 50-50 shot of it going up or down. It's extended. It's moved hard, fast in one direction. Whether or not you're using a close or a median is going to make the difference between entering there or there or there, somewhere around there, somewhere where it's extended. It doesn't matter which one you use really, but I use the median because the median is the closest to the TDI. So if you look at a TDI, I think that's the right TDI. Oh God, select. There it is. So if you look at the TDI and the RSI median, that's as close as you can get basically to what the TDI is. And that's the TDI is the reason I started using the RSI, because I was studying TDI. So that's why I use the median. But if you use the close, it doesn't make a massive difference. Oil is like gold, untradeable. Yeah. It's not. I mean, it's not. It's a lovely thing to trade. It's very. It moves like gold. Commodities. I'm not a commodities trader at all. I've never got on with commodities, and they are supply and demand driven instruments, and their movement is based on something else, and I don't get what that else is. It just doesn't, I can't seem to pick the levels properly on it. And you have to give up, basically, when you identify stuff that just kills you. And I've done a video on this, haven't I? Why I don't trade gold. There's one on, there's a video on YouTube, why I don't trade gold. And it's basically because when I did my analysis on my P&Ls, gold always makes a loss. Oil always makes a loss. Eliminate oil from my P&L. I eliminate that loss. I become more profitable. Simple as that. Oil is one of those instruments that just kicks me in the arse every time I trade it. I had some really good results on it before Christmas, but since Christmas this year, everything I've done with it has been marginal at best. So I'm out. However, saying that, if this thing now flies up to there, I'll give it the benefit of the doubt. I always feel like they are manipulated. Everything's manipulated. That's what the market is, manipulation. This is why I say it's a random thing that you have no control over. If something's being manipulated by a third party, you have no control. So it doesn't matter, does it? How it's manipulated. The manipulator will always be trying to play a game with the manipulatee. If you are the manipulatee, which you always will be because you haven't got enough money to move the market, you have to look at what the guy is thinking. So the guy, if you believe in stop run theory, you believe that it's heading down to there. You believe that when it bounces from there, it will do that. You will then put a stop loss there and they will come and take that stop loss out and bounce like that. And then you will put your stop loss there because now you're looking at this layer area and it will come down there. You will take a long there, put a stop loss there, and they will come down there and do that. That might happen. How do you know who is going to manipulate it to do that though? This thing could fly up there this afternoon because they suddenly come out with an announcement that they're going to reduce the production cap or increase the production cap and everybody can produce more oil. That is going to tank the price of oil. But if they reduce the production cap, it's going to make the oil price fly because there'll be less of it and the demand will be the same. Therefore, it will pump. Give the pun, it's oil. It's still a completely random thing. The difference with oil and the difference with gold is this: speed of movement and the way that it moves is different to Forex. And it doesn't seem to pay attention to support and resistance in the same way as FX pairs do. So it's just, a lot of people, say, why don't you trade this? Why don't you trade that? Because for the way that I trade, it doesn't suit my personality. It suits other people's personality. Other people trade gold and they trade nothing but gold and they make a fortune. Good for you. I don't. You can't make money out of Forex. I can. You have to pick the instruments and the strategies that fit with you. And that's half the battle of learning to trade, is you've no idea what suits you until you try everything, which is why you system hop. So it's just oil. I just can't find a strategy that works on it, that fits with my mindset. And people will then recommend loads of strategies. They don't fit with my mindset. If they did, I'd be trading them, wouldn't I? This is the way it is. You just have to try stuff until you figure out what works for you and what doesn't. So, but oil is not my friend. So I've fallen out with him. I'm not playing with him anymore. I'm not accepting his phone calls, and that's it. Aussie dollar CAD, really, really trying hard to come down. We seem to be stuck at this resistance at the minute, unable to break. So we need to get this low broken, and that frees up a drop back down into here, which is previous day's high. This dotted line, previous day's high. That is target. So initial target. We need to get this low broken today, though, and that's it. Then there's nothing to stop it coming down from this area here all the way down to there. So we've got a nice drop of half an ADR if we can get that broken, but it looks like it's trying at the moment. Fingers crossed. Lots of good wicks to the upside. So the buyers are totally out of control. Sellers fully in control. As soon as we break that low, that tweezer bottom, we should be off. So it's looking good for short Aussie CAD, if we can get that down. I think you did great analysis. When was at 65 was a buy? Then you predicted the gap fill. Yeah, this is gap fills are different things. A gap fill trade is a gap fill trade. Gaps fill all the time. We know that. Timing the gap fill is the difficulty. So a gap, I'm happy. I would trade oil again if I saw a gap. But just trying to trade oil speculatively, I just can't. I can't get things like this yesterday, right? That suddenly happened when there was something announced with production rates from the Saudis, or whatever it was. I don't fully understand the mechanics of oil movement. It's alien to me because, to me, being a supply-demand based commodity, I would expect when we get barrel counts come out negative, it will have an impact on the currency. I.e., so if we were expecting to get 1 million barrels, right, and we got 800,000 barrels, I would expect that to have a positive impact on price. There is less supply, demand remains the same, prices increase. That is how markets work, supply and demand driven markets. Anyway, what we find is 3:30 this afternoon, we're going to have the oil inventories released. Doesn't matter what those numbers are. This thing will just go wherever the hell way it wants to, when it wants to, for no reason whatsoever. So if it doesn't work off of fundamentals and it doesn't work off of supply and demand, and it works off of a news event which wasn't read and it tanks that much for no apparent reason, how on earth can you predict any kind of movement on it? You can't predict any movement anyway, but if you've got something that moves so erratically and so irrationally, as far as I'm concerned, I don't see how you can trade it. Other people will be looking at it and going, well, it's obvious it's coming down to there because of X, Y, Z, which is fine. That's why you trade oil. I don't, because I just don't understand that logic. I'm a logical guy. Everything I do is programming related and based on logic, predictive movement, all that sort of stuff. This is just an illogical beast, and I can't tame it. So, and it's exactly the same with gold. Gold, at the end of the day, gold is a US dollar cross, and we know it's a safe haven so that when we have times of trouble, we get money piled into gold. Other than that, I've no idea why this moves. So FOMC this evening, if we get a negative FOMC result, it's going to go through the roof. If we get a positive FOMC result, it's going to tank. I know that because it's a US dollar cross. But for some unknown reason, every now and again, it just flies for absolutely no reason. And it's obviously to do with something underlying going on behind the scenes. You would expect the oil price, the price of gold, to have absolutely skyrocketed when the Ukraine war started, which was back here. Yeah. So again, it's a supply and demand driven commodity, right? So we suddenly put an embargo on Russian gold. Russia holds the vast majority of gold in the world in its vaults, right? We put an import-export ban on it, which means all of a sudden the supply chain is cut, right? So if you have less of something available and everybody still wants to buy it, what happens to prices? What happened to this? Yeah, I don't understand it, so therefore I don't trade it because it doesn't conform to logic as I understand it. So there's all sorts of reasons why that might have happened, but it doesn't make sense to me. So, and this is why I don't trade crypto. People say to me all the time, why don't you trade crypto? Why don't you trade Forex? Because you don't understand Forex. I don't understand crypto. Yeah. So you've got to pick, and this is an important part of trading and learning to trade, is picking what works and what makes sense. And if it doesn't work or make sense, you just get rid of it. If you cut that out, that loss is gone. That loss is gone. Your profit is instantly increased, isn't it? So DAX is rejecting that propulsion gap at the moment. We've got a 3-bar reversal just gone in. It is inside bar at the moment on that bear candle. So bearish break of that level there would be a good short. I'm not going to take it because I told myself I'm not going to take it. Euro Aussie took the long way back home. Yeah. Yeah, so done it though. There's a propulsion fill, return to origin. So all those most of those Aussie moves are all undone now. Most of them, not all of them. Euro US dollar is rejecting the previous day's high. M5 reversal alert is there, so that would be a good looking short if that is a rejection. So we've pushed up above this blue line, which is previous day's high, rejected. Potential short on Euro US dollar there. But again, as I say, today I'd be playing ranges. So assume that is range high back down to where we opened, or 125 ADR is going to be pushing it. But this is previous days and yesterday's lows. And in propulsion, that's all I would be looking at today. I doubt very much you'll get down there though, because FOMC, we're not going to put a load of money into the US dollar ahead of FOMC. Audi's going electric. They divorced oil too. Yeah. This is the other thing, about oil. The supply and demand balance is going to change dramatically, isn't it? And we don't know how fast it's going to happen. So I've got an electric car. I've had an electric car for 5 years now. I haven't been to a petrol station for 5 years. I don't need to because I don't use petrol anymore. I therefore don't use oil. I have electric and gas, but I don't use oil anymore. So the demand for oil is going to drop. And it's all to do with the production values of oil and how much they produce as to what the demand is going to be. So I foresee in the future, obviously in the next 20 years or so, the Saudis are going to be bankrupt because that's all they do is oil. So they're going to be stuffed, aren't they? It's almost turning from a first world country to a third world country because all of a sudden you've had your income cut. You ain't got a job anymore. But when that's going to happen and how that's going to affect prices is very, very, very complex. And, it's too complex to trade. The euro US dollar exchange rate, we know, is driven by fundamentals on how the euro and the US dollar is attractive from a interest rate and an economic perspective. Very simple to understand. Oil, confusing for me anyway. So give it a wide berth. New Zealand dollar CAD, good for a short. I am in short one yesterday from the hourly RSI extension, which we are still in. M pattern going in at the moment. Oil I'm out of. Oh no, sorry, no, I'm still in one. New Zealand dollar CAD, yeah. So we've got a nice M pattern forming at the moment on the RSI. Very extended, embedded. So yeah, good looking short opportunity back down into this double top. Propulsion gap fill there, propulsion gap fill there. So yeah, plenty of opportunity to the downside on that one. However, it's all dependent on the FOMC as to whether or not they dump it or pump it. So bullish FOMC, bearish New Zealand dollar CAD, basically. Really nice rejection on that DAX. God, that's so tempting to take. I'm almost like wanting to jump in with a 1% risk on that. Because if this DAX goes for that gap fill, it's not going to go for it today. But if it starts to make that move towards that gap, that's a really profitable trade. Not going to do it. I'm going to withhold myself. After the 15-minute open, when banks, pension funds trade, is it then mostly algo trading? After the 15-minute, are you talking about the opening range breakout? No, it's not. Well, yeah, there's algos are trading on constantly. Algos trade 24/7. But this is when the speculative. Well, yeah, I suppose algos are speculative most of the time. So the algos tend to be very short term. But what you get taking over after the initial cash balance goes in is all the speculative traders in the investment banks, the pension funds, anybody that's looking to make money basically on medium term movement intraday. That's who takes over, which is why after you get this initial drop of orders going in, that's when you tend to see the real direction for the day or the real movement for the day tend to start. However, today obviously is FOMC day. So the likelihood is we're going to play a tight range and whippy because they're not going to want to do a lot of movement. So there you got double-ended stop run basically there. So they've just cleared the decks for the last 20 minutes, opening up the doors for a nice short back down into this propulsion. Gold and oil also move hugely without stopping and without any pullback. Yeah, exactly. That's the problem. When you're a position trader, that's why I don't position trade gold, at all, and why I've eliminated gold, because it's too fast. When it goes too fast for you to get a position. I rely on market structure reversals to enter the market. If you get something that just goes like that and doesn't pull back or doesn't flag in any way, shape, or form, you can't get the spacing. You have to take a gamble on that this might be the end of it. And quite often when you're catching a falling knife, obviously you get stabbed in the hand or stand in front of a steam train, you get run over. So it just doesn't work. It's just wrong. It's the wrong type of movement, that's all. K-Tan, I don't trade oil. I tried it and it doesn't react to the markets the way the currencies do. No. Simply accept it's not for you. Good. That's it. Move on. Plenty of other. You've got 28 FX pairs that move beautifully most of the time. Just concentrate on those. And this is what people say. Like I say, people ask me all the time about the indicators and the EA specifically about synthetic indices and about crypto. Can you use it on crypto? Can you use it on synthetics? Everything moves. Whether or not you can make profit with it, I have no idea because I don't trade them. Why don't I trade them? Because I don't understand them and I don't really need to trade them. I've got 28 instruments that give me multiple opportunities a day to trade the market. Why would I add 500 more? crypto pairs. There's just no need. You're going to have too many opportunities, basically. So you don't need that much to make money. Did I cover pound New Zealand? I don't know. I've got a long on pound New Zealand at the moment. Just had a reversal alert on that one. Extended on the hourly yesterday. Nice divergence there on the hourly RSI. Bullish, which is now playing out. So yeah, long potentially. So we're coming out of this propulsion gap at a weekly support. So potential move back up into there, which is 125 ADR. DAX is pushing out the highs. Nasty beast today. I haven't got the ORB running on the fundeds at the minute. Annoyingly, because we had 3 really good days. Well, today's not running. Dubai's oil has run out and they are struggling to pay for their infrastructure as tourism doesn't quite balance the books. Well, yeah, when you've got like 25 gold-plated Rolls Royces, yeah, tourism probably doesn't pay the pay the bills. Oil has run out, is it? Didn't know that. I'm paying attention to it. Can you tell us why you switched from 14 to 21? Just because volatility is increasing. So if you look at the RSI, the ADR, when ADRs start to, or volatility starts to pick up, it's usually a sign that the average daily range is going to start to pick up. We've had very, very quiet, contracted markets for a while. And we are now seeing things start to move more. So that's literally it. When I don't change RSI often, it's very rare that I change my RSI, and I only change it on the hourly. The 4 hour, I always trade the 14. But on the 14 RSI on the hourly, what tends to happen is you suddenly look at your P&L and go, I'm flat. Or I've got like 3 trades on, and I've had 3 trades on maximum for a week or so. And you're looking at it thinking, well, why am I not entering positions? Because the market's gone very flat. So to be able to get opportunities, you have to use a more sensitive instrument. So the 21 is great for normal conditions, but when you get to the point where the market's just not able to get those extensions anymore because it's just not got enough movement, switching down to the 14, as you can see, just makes it that little bit more sensitive, which gives you the opportunities again. What you then find is at some point you get to a point where you go into quite a big drawdown quite fast on every instrument. And it's not because you've over leveraged, it's because everything has started to expand. The volume's got louder suddenly. And at that point, then you turn it back down again because you find that you're going to get too many opportunities and you're going to get too overexposed. There's no rhyme or reason to it. It's just a feeling that we're not able to get. Why can't I select the RSI? You just find the opportunities dwindle away and then they come too much too fast and then you just have to tune it back out again. 90% of the time, 99% of the time, I'm on the 21. But this year, we were really contracted, and you can see on the directional bias scorecard, which is one of the reasons I changed it in January. We had virtually all the instruments sitting in range bound. Yeah, so everything was sitting in a range. There was like 2 or 3 instruments on either side that were buys and sells, and they were like 5s and 6s. This thing goes up to 14. So everything was, from a fundamental perspective, everything had no real strength in any direction. When you've got no strength in any direction, you tend to find the market plays a range an awful lot more. Absolutely amazing for making money. We did 68%, I think it was, in March or something. Huge, because the market was just spot on, perfect for range bound trading. So if you take every trade on every instrument, you just milked it. But it's starting to get to the point where we're getting volatility coming back in because the market is getting a little bit jittery about the interest rates. Interest rates are starting to peak. When interest rates start to peak, they will then start to drop. And inflation, and then basically you get the opposite race we've had. Inflation's been going through the roof. So there's been a race to increase interest rates and keep unemployment under control at the same time to get on top of inflation. Now we've got on top of inflation and inflation is starting to come down across the board. There's going to be a race to drop interest rates as fast as possible so that inflation doesn't drop out below 2%. Because if it drops out below 2%, you get a horrible market condition and contraction and GDP contraction, and you get recessions forming in the opposite direction. So it's all sorts of balancing acts going on. But the market, when you've got constant interest rate rises, no one has an advantage over anybody else because everybody's in the same boat. When you get to a point where someone is sitting at like 1% and they're sitting at 2% inflation, and everybody else is coming down at a rate of knots, that's the most stable place to put your money. And I'm pointing at the US dollar because they're usually the people that get there first. That's the most stable place to put your money because the markets that are looking for a long-term investment and looking to make money steadily will tend to do that. What you will find is when this all returns back to normal, the S&P will be your gauge as to we are back to normal. The S&P will go back into its normal mode, which is making money. Yeah. The S&P is manufactured and designed to give an annual return, apart from when you are in a bear volatile market, which is where we are at the moment. So we are starting to look like we might be getting back into a slight bull market. However, the banks are starting to fall over. So there is every chance that we're going to head back into some kind of 2018 crash market again. But the difference here and there was we were in a bull market, then we had a crash. We're in a bear market when we get a crash. This thing's coming down like an absolute pack of cards. So there's a lot of volatility starting to return back into the market. We can see it in the fact that things are starting to return to normal on the indices. But this could well be short-lived. We are very much struggling to make new highs. Yeah, every time we make a new high, we get rejected. And we, you look at this as an angle compared to what the S&P is usually doing. This isn't normal market conditions. So you just have to adapt, and again, I talk about EAs a lot and the fact that there's no such thing as a set and forget EA where you just stick it on a chart, you sit there and it automatically makes money while you drink Mai Tais on a beach. It doesn't exist. If it did exist, at 15 years in this industry, I'd have found it. I hunted hard, spent a lot of money looking for it. Haven't found it. Tried to build many of my own. Can't do it. So you have to be able to adapt, and changing the RSI when I identify that the market is different is part of that. Whether it's right or wrong, I don't know, because until I do it and I start trading with the new version of the RSI, I won't know whether or not it's going to be good or not. Happily, it was. And it got to the point in the last sort of few weeks where it was getting a little bit too scary because there was too many signals coming in, too many trades going in at the same time. So I've reined it back. If it all starts to contract again, I'll probably expand it again. But at the end of the day, you don't need to worry about things like that, because if you just leave it on 21, what will happen is you'll have a few months where you make a bit less money than normal. What's important is capital protection, is risk management. Yeah. So if you make a bit less money than normal, you're not overexposing yourself. That's a good thing. Yes, you'll take less trades. Yes, you'll have less opportunities, but no, you won't blow your account. So, it's riskier using a more sensitive instrument. A lot of people trade off the 7. Look at the difference between the 14 and the 7. Yeah. There's your peaks. Sorry, on the 21. So there's your peaks on the 21. Yeah. Watch what happens when I change it to the 7. It's more like a stochastic. Nobody uses stochastic because stochastic's notoriously unreliable. But look how many signals you had if you're using the 7. Yeah, all of a, and look at where it got to. I mean, I don't even know what that extension is. 96.6 extended on the RSI there. Yes, it was a fantastic signal, but would you ever trade the 96 extension or the 95 extension on the 7 RSI? Just doesn't, doesn't come into the equation, does it? So, but the sensitivity of the instruments that you use or the indicators that you use will directly impact what entries you have, and everybody's going to have different entries. So fine tune as you see fit. Backtest. Go onto the hourly, scroll right out, change your RSI, see what the impact was. Did it make a positive or a negative impact, changing from 7 to 14? Have a look at it. You can do all this yourself. It's very easy. There's a video on YouTube that I've done about backtesting the RSI, because it's such a simple thing to backtest. You look at this now and you basically draw a little circle or draw a line where you got the extensions and look at how many of those would have resulted in a positive position trade. Yeah. Right, that one you would have been in there, out there, in, out, squeeze. Right, so here you get a squeeze. This is the S&P. Obviously, I don't position trade the S&P, but that you would have got a squeeze. Regardless of whether you use the 7, the 14, the 21, or the 28, you got squeezed there. Nothing you can do about it. Absolutely nothing you can do about that one. That one, and then that one. So yeah, everything works very, very nicely. And now switch it, do the same experiment again on the 14. See how many squeezes you'd have got into. So I got into 1 squeeze in a quarter on this instrument using the 21. Switch over to the 14. Do the same thing. How many squeezes would you have got in using the 14? If that comes out as more than 1, don't use the 14. It's that simple. It's that easy to backtest. This is why I love the RSI, because it's such a simple strength indicator. And, we're trying to ride the waves of the banks. We know that when the banks have pushed hard in one direction, they profit take. So all we need is something that tells us when they've pushed hard in one direction, and we know that move is coming. We don't know when it's coming. We know it's going to happen, because it always does, because they always have to make money. However, occasionally, just as they're about to make money, something fundamental shifts and they go, actually, we could get more out of this, and they will squeeze everybody. And there's nothing you can do about it. But it's about minimizing the number of times that those squeezes happen so that your P&L is as comfortable as you can keep it while you're making money. And that's why the 21 is the one that I found is the best, because that makes me the most comfortable. Some people are happy to sit in 50 to 60% of drawdown on their accounts. Use the 14, go for it. I'm not. Some people are. And again, it's a personal thing. How many instruments you trade, how much drawdown you can personally handle is a totally personal thing. You won't know it until you tried it. So you've got to fine tune it basically to your individual personality and settings. Tim, Saudi might be 20 years behind, but not because they're running out of oil. Moresco. Oh, more so. The oil is becoming less black gold than it once was. You see how they're building new infrastructure to preempt that. Yeah, and they're building it bloody quick, aren't they? Got to check my Fidel random news generator before I take my EU short. Yeah. Yes. Fidel Crest. I'm interested. I really want to pass this now because I want to get a funded account. I want to see what their rules are on their new contracts. I feel kind of S&P rises back some losses from yesterday prior to whatever happened during Powell. Yeah, I mean, basically, this is going to move this afternoon, this evening. So again, the S&P is an inverse US dollar index. So if the US dollar pumps, the S&P will drop. If the US dollar dumps, the S&P will pump. Again, they're all negatively correlated. So it's all driven by the same thing, which is fundamentals. Indicator settings are so important. Sometimes it's not that the indicator doesn't work, but the settings of the indicator, that isn't the correct one. You have to be very careful, Kaitan, though, right? So when you're doing, this is an important point, right? When you are doing backtesting, you have to be very careful not to curve fit. And I build EAs to backtest everything. I've backtested virtually every indicator with EAs that I've built to backtest their effectiveness. And I'm not looking for making money. I'm looking for the strike rate, because the strike rate for me is more important. Because as a position trader, the best thing that I can do is be in a position for as little time as possible. So it's the squeezes that I am always trying to eliminate. And that's what I focus on. So the strike rate of the indicator, as in how many times it will give me a condition in the market which has resulted in what I was expecting, is what I'm after. You have to be careful when you go. Let's look at the 4 hour, for example, here, right? Let's do it on the hourly. Let's do it on an FX pair. So there is your RSI 21. So if you look at the RSI 21 and go whatever result there, and you go, yeah, there's 3 squeezes there that I didn't want to get into, so I'm going to try the 28. The 28 smooths it out, so you get less opportunities, but you get 0 squeezes. You'll be like, brilliant. So the 28 is the one I want to use, right? So now go back to a completely random point in time and do that same test again. Did the 28 work there? Yes or no? Go back. Another time. Did it work there? Yes. Go back. Find another time. Random. Did it work there? Find out. Yeah, this is called out of sample testing, or OOS testing. So whatever when you're developing a strategy, whatever period of time you use, i.e. from the 1st of Jan this year to the 30th of March, for example. Yeah, January, February, March, 3 months. So let's say you use that 3 months as your testing period, and you optimize and fine tune whatever indicators or instruments you're using to work perfectly during that period of time. You then have to take those exact settings and do the test again over the previous 3 months, right? So that you can verify that it isn't just you tuning this thing to meet these market conditions, because these market conditions that appeared here are never, ever going to appear again. There is not 1 month in the entire history of trading that has identical trading criteria and patterns to any other month ever in existence. Every single market movement is randomly generated, and it's all completely different. You will never find 2 months that produce the same results. So what you have to do is you have to make sure that the instruments and the indicators that you're building your strategy on, you are not curve fitting and building it to make it work perfectly here. It's got to also work to a degree here, and then 3 months previous to that, and then go back a decade and choose a 1 year period, and it has to produce similar results back then. It's never going to give you the same results. If you get a 10% return here with a 3% drawdown, right, that is never going to happen again on any other month. It will be somewhere in the region of 5 to 25% profit, and the drawdown will be anything from 18% drawdown to no drawdown, whatever. You're never going to get the same result. So what you've got to do is pick a median, and this is what we call a bell curve. If you did the same test over 10 different periods, so 30 months in total, so if you took a 3-month period, tested, and then did another 10 months before that, what you're going to find is you're going to get some results that are here, some results that are here, and some results that are here, and a couple here, right? The median of them is what you need to focus on, because anything within that part of the bell curve there has a high probability of happening in the future. Everything here, which is what we call an outlier, That looks a bit rude, doesn't it? Everything here, which is an outlier, basically is unlikely to happen in the future. Yeah. So the most losses and the most profits are very unlikely to be reproduced, whereas what happens on average is very likely to be reproduced. And this is how I came to ADR and why I use ADR all the time, because something that moves on average a certain period number of pips is likely to move on average that number of pips again. It will go outliers to 225 ADR 2% of the time. It will go outlier to 150 ADR X% of the time. But 60% of the time, it stays within that bell curve. So when you draw a bell curve, you take 60% of those results, and that is your average or your mean that you will find will be reproducible again and again and again. So you have to be very careful when you're doing any kind of back testing with any instruments as to where you do your testing, which is why I say you've got to, people come to me with a strategy and go, I've back tested this over last month. It's got an 80% strike rate. Well done. What did it do the last month before that? Don't know. Have a look. Oh, because you've curve fit it to fit this market here. So this is the last months of activity, these purple lines. So if you make a strategy and optimize a strategy to give you the best possible return over this particular thing that happened, yeah, it didn't happen the same the previous month. It had twice the movement and twice as fast as this month. The results there and there are going to be completely different with your strategy. So you've got to backtest over a period of time. And my initial backtesting with any strategy that I do is 6 months. As long as it's on the hourly or lower time frame, I do 6 month development. And then I take that 6 months and I try the previous 6 months. If that entire year doesn't come out as profitable, scrap it. No use. Because if it worked there and it didn't work there, it's useless. If it works there and it gives me anything up to 50% of the result that I got here, right? Then I will go, okay, this has got potential. So I'll take that entire period, get the profit, the strike rate, and all the important statistics, and then I will replicate it over the previous 12 months. If it can produce 50% of that, again, over that previous 12 months, we've got a strategy that's robust over a period of 2 years. That's how you do it. And that's how I came up with the settings on the RSI and why I use the settings on the RSI. And people like Steve Mauro, they've done the same thing. Steve Mauro was a prime advocate of Dean Malone's TDI indicator. His settings on the TDI are different to my settings on the TDI. Yeah, but he did the same thing. He's got a slightly more aggressive TDI setting than I've got a RSI setting. But I position trade, he used a stop loss. So it was more important for him to get those big fast movements. It's not important for me to time those big fast movements as much. It's more important for me to be able to get in and out on the swings. So it's a different use of the same indicator, but the back testing has to be done over a long period of time. So go and do your own testing with it. And again, use other oscillators. And I say this in the bootcamp. If you don't want to use the RSI, fine, use something else. Don't use that. It's a load of crap. But use something like the CCI. Use the MACD if you want. Yeah, MACD. When we get above X on the MACD, yeah, all oscillators do is measure movement. The reason I like the RSI is because it measures strength rather than an average. And moving average convergence divergence indicator is not measuring the strength of market movement. What I'm looking for is the banks to have done a strong move and pull back. That's why the RSI is my key, not the MACD, because I'm not looking for averages. I've got average indicator. It's called the ADR. That tells me what the average movement is. I don't need this. This is what I need to tell me what the strength of movement is. And is the strength of movement beyond its normal ranges? Yes, brilliant. Then there's likely to be a reversal. That's the whole purpose of the strategy, the whole theory behind it. And you've got to pick the indicators that fit that for you. And they're going to be different depending on what you trade. So there you go. That was a long waffle about something. Can't even remember why I went off on that waffle. Oh yeah, K10 asking about indicator settings. Johannes, sorry I'm late. Did you do oil? Is that a joke? Are you joking? I don't know if you're joking or not. Oh, crap. I'm not doing oil anymore. I need a load of these oil. Basically, John Wick in a black suit is pretty much oil, isn't it? So there we go. So yeah, oil's fallen out of bed again. Don't know why. So I've been stopped out and lost 2%. I don't know where it's going. It's going down here, and then it's going to come back up. Maybe. I don't know. I've lost faith in it. I've lost all interest in oil. It's just a monster movement beast that I'm not interested in talking about anymore. You're making me sad, Johannes. But yeah, I don't know where it's going. I have no idea. I don't know why it's going down at all. The market. All I can say is Goldman Sachs, JP Morgan, unlucky. You must be losing a fortune because you guys have called it to 95 to 107 a barrel. Unlucky. Sorry, your customers are very upset with you, but if you've called it to 95 to 107 a barrel, you're stuffed. I have a feeling Fidel is going to say, nope, we can't pay. You traded the third Wednesday of the fourth month during a waning gibbous or some lame excuse. Yes. An oil 8-ball might work. Yeah, that could be oil. That's our oil. I don't know. He looks confused, doesn't he? I reckon that's actually an explosive. And he's looking at someone going, you're just to get blown up by my 8-ball because you traded oil. Sorry, it was on vacation. Not been here for a week. I know, it's just today. Yeah, and it's basically, I longed oil yesterday. You haven't been here for a week. All right, well, so did you catch that? So I called that gap fill, right? And then I got all excited because I was expecting a bounce somewhere around here or here. And all it's done is absolutely collapsed out of bed and it's just falling through the floor and I've no idea why. There's no news to support it. And I just don't get it. So I'm not interested anymore in oil. US dollar's really weak ahead of FOMC. Just so you know. So yeah, I don't know. This 4-hour bounce basically is a peak formation low we were looking at. If you stick a fib on this, there is still a chance basically of a 71 bounce, which is here. We got the 50 bounce. That's where I entered on the 50 bounce. I entered there as we break that high because I was expecting a push back up to where the market's expecting it to go. But, you know, you kind of think when you listen to the largest banks in the world calling a level, they might actually have a clue what they're talking about. But with oil, it doesn't seem they do. So, yeah. Huge extension. See, again, RSI doesn't respect it. Yeah, that doesn't happen. You don't see that on FX pairs very often. Very, very rare. But look at the divergence we've got going on now. Huge bullish divergence. But does oil pay any attention to bullish divergence? Good there. Don't know. On oil, what I see, my broker doesn't charge a fee for a buy and does for a short. Don't know. Broker should charge per round trip, or well, normally brokers charge per entry, not direction. So I don't know. That's a weird one. Right, DAX is going nowhere. So we have done the gap test, but yeah, DAX is a dud today as well. Nothing really moving. So if you look at all the FX pairs so far today, we're not going anywhere much on anything. Aussie New Zealand's coming down a little bit, but everything's pretty sideways, especially US dollar related. The market's not very interested at the moment in doing an awful lot. So we may well find that today we are going to get a sideways one. It doesn't look like we're going to get a run for ADRs anywhere, does it? So pay attention this afternoon to the non-farm employment change. That is very hit and miss. Sometimes we do actually get a good kickoff of that. It depends, I think, whether they need to move the market and get themselves positioned ahead of FOMC or not. But sometimes we do get a kickoff of that. We've got PMIs this afternoon at 3 o'clock. So there's a good chance that the PMIs are going to move the market. We're very much interested in anything to do with inflation at the moment. So that's going to be important. But that's the big one. So the press conference is where we're going to get the movement this afternoon. If that comes out at 5 for any reason, all hell is going to break loose, because they've been promising us 5.25. But I think the market was also been very cautious in factoring in that 5.25. So this is going to be the key. Is it terminal rate, or what is your plans for the next quarter? That's what we're interested in. We need to know from the Fed what they're planning to do from here, because if they don't increase that and they're saying that, yeah, we're fine, inflation is coming down at the speed we want it to, this is it, I think we're probably going to start to see a little bit of US weakness coming through. So we will see. New Zealand dollar yen, I look at that one. I'm going to shoot off because I've got bits of coding to do. New Zealand dollar yen is basically, the trade on this was here. I've got 2 shorts on it at the moment. Didn't manage to get a third on there, but yeah, coming down nicely. This move that we had last Friday on the yen, the New Zealand dollar has weakened further, strengthened further, giving it a little bit more of a kick. Big move yesterday. And we've got a new low today, so it's a short for me at the moment. There's propulsion gap targets all over the place to the downside, but the trade was here on this big, strong push. So if you believe it's coming back down, and we are going to hold that double top bounce on the previous month's high, then you should be looking for these weekly targets, these 2 black lines here, as your target to the downside. 125 ADR. I'll be out around about 50 pips, so somewhere around there. So that's where I'll be getting out, somewhere around there, which is before that support. So all this area here is support. So if we're going to do a bounce and continuation, that's what we'll be looking at. If we are just going to flag and break, obviously that's just going to flag and break. Euro US dollar target where? I don't know. Have you not got the support resistance propulsion indicator? There's your target to the downside. I have a trailer on my UJ trade. Almost want to remove it just in case the bottom falls out the dollar. It's difficult. Really difficult to tell what's going to happen with this US. I think this is, I've said this before though, I think this is a key one. But every time I think that, they surprise us. We were talking about 5s and 4.75s, and then they creeped it to 5 and 5.25s. And now we're up at 5.25, or looking to go to 5.25. There's pressure on them not to go to 5.25. The Fed are notorious for pumping and dumping the dollar. At the moment, it's very difficult to pump it. They are finding it very hard to rally the US dollar. Every piece of negative news is dumping the dollar. Every piece of positive move gives it a little creep. It's just really heavy. The dollar feels massively heavy at the moment. I just get the feeling when and if the Fed come out and say, that's it, I just get the feeling this thing could collapse at a rate of knots. But equally, the other argument is the market's already factored in the fact that they know it's not going to go up anymore. And the reason we're seeing this lack of strength on positive news on the US is because the market just doesn't want to go any more long on it because it's balancing itself out. So it's possible the US dollar could become the whipping boy and go sideways, and everything else will push around the US dollar. But it's also possible it could drop. At the moment, the way this market is, it's totally logical that it could go completely bullish if we get them reduce the interest rates. Nothing makes sense at the minute. This market is just fundamentally stupid at the moment. It really is. It's not paying as much attention to the fundamentals as it used to because everything's in a complete chaos at the moment with interest rates, inflation, and it's the balancing act is such a mess. So very tricky to tell where anything's going. My website seems not to be loading. Yes, it is. Oh. There's a data problem. There's some issue with data by the looks of things. Retail sentiment's gone crazy, look. Some of the data feeds seem to have gone a bit weird. I'll have a look at that in a minute. Looks like retail sentiment feed's gone haywire. I'll probably get an email about it from Google. Yeah, it's retail sentiment's gone wrong. We'll have a look at that in a moment. Gold, don't know, Ratty, up or down depending on FOMC. Got long on the Euro Swiss at the beginning of April in 3 positions. Was a dick for a tick when it just missed my exit by half a tick a few days ago, being too greedy. Euro Swiss, yeah, should do. Euro Swiss, basically, we've got the rates for the euro next week. Sorry, no, rates for the euro tomorrow. What am I talking about? So we're forecasting 3.75. But there is talk of 4. So this one is a real tricky one tomorrow as to whether we get the 3.75 or the 4. So obviously anything above 3.75, the euro is going to go through the roof. However, Euro Swiss is the tricky one because the euro and the Swiss move in tandem together, which is why it's only got an ADR of 42 pips. When you get a bullish move on the euro, you also get a bullish move on the Swiss. So they tend to kind of cancel each other out. The euro will obviously win, but to what extent is difficult. But if you look at the euro Swiss, it's very this is the Swiss franc interest rate rise where they shocked us and said, actually, we're going to increase interest rates for the first time ever. And we were like, what? The market just went mental on the Swiss franc. They absolutely piled into it. Apart from that, that's what the Euro Swiss normally does. So it's one of those pairs which is really safe to position trade the vast majority of the time, unless the Swissies are doing something stupid. So you just have to wait and keep scaling in and keep bringing your average down within your ADR, and you'll get out. This is moving actually quite a lot more. There seems to be money coming into the Swiss franc. Yeah. So there's a bit of money coming into the Swiss franc today, ahead of tomorrow's movement, which again would indicate potentially we might be getting a bull move. Euro's pumping as well. Look. So I think the market is, you see the difference. Yeah. So this Euro Swiss tells you which one's in control. Euro odd is pushing. Euro CAD is pushing. Euro pound coming down. So the pound is stronger than the euro today. Euro New Zealand is pushing. Euro Swiss tanking. So that tells you how strong the Swiss franc is. The Swiss franc is very, very, very strong today. So they're obviously piling into the Eurozone, expecting that rate increase. I reckon 4%. I wouldn't be surprised to see 4%. Just had it from the Aussies. The Aussies were forecasting 3.6. They went 3.85. So yeah, we'll see. We'll see. It's a tricky one. But yeah, I wouldn't be too worried about the Euro Swiss. Just make sure you scale. Don't get in too close, too fast. Euro New Zealand, good long, yeah, at the moment. Got one long on that at the moment. That's an hourly RSI extension from here yesterday. Daily DAX RSI divergence. I don't know. I don't trade RSI divergence or RSI in the DAX. Possibly. Right, I'm going to leave it there. I'm off. Some coding bits and bobs to do. So I'll be back this afternoon at 2:20 for the New York session. Not expecting huge amounts off of New York today, but we'll see. Anything you need, I'll be in the Telegram group. I suspect we'll just be flip-flopping up and down today. Very difficult to bank anything because it's likely we're just going to go sideways. So we'll see what happens, though. We might get some movement. But otherwise, I will see you 2:20 this afternoon. Back tomorrow morning, 7:50 for the same time for the Frankfurt session. And I'll be in the Telegram group if you need anything else. So have a good day, and I'll hopefully see you guys later. Have a good one.